Stokes, good morning. How are you,
Morning.
my friend?
Happy Aloha Friday, Chad.
Aloha Friday, cuz. Here we are once again.
Yes, and
You seem very meditative.
I'm trying to bring out the positivity in the world right now
Okay.
because it seems like everyone is just hating each other. It's just absolutely nuts out there.
Let's start doing meditation Fridays.
Hey, I'm cool with that. I'm cool with
Yeah.
that.
Yeah.
How's your week?
Everything's good. I'm busy as hell, and I've got 3 escrows going, and want to pull my hair out, but it's a good problem to have. And you mentioned the election year, and I was like, hey, if this is what happens during election years for real estate markets, then let's have an election year every year. Obviously, that's not what's causing everything in our market, but I'm sure it has something to do with it. And I know with what you guys are working on, there is some correlation there. Is that accurate?
It's really interesting. There's Schwab came out with some research a little bit ago, and they talked about, for those who don't know Schwab, it's basically just like it's a custodian. So your money can be housed at certain, I guess, banks or institutions, and Schwab basically holds on to those assets called custody. Anyway, Schwab came out with some research, which is really interesting. They found that over the last 23 presidential election years, 74% of the time, at the end of the year, there was an average annual return of roughly 7.1%. So that is, it basically just kind of goes back to and highlights the need to have this understanding that markets over the long term are efficient. And even though elections can kind of stir up some different thoughts and priorities for certain parties or whatever are kind of front and center and in the news, at the end of the year, on average, it roughly ends up, or 74% of the time, it actually ends up being higher, as far as the market returns are concerned. And I'm speaking in particular about the S&P 500 because that's just what most people kind of benchmark their portfolios to. So super.
So it was a what was the percentage again?
So 74% of the time
Right.
in those election years,
Right.
17 of the past 23 election years, the average return at the end of the year was 7.1%.
And what's the average return on a non-election year?
It varies, but it can be anywhere on the S&P. It can vary, but it generally between 8 to 9%
Okay.
on average. But again, like those numbers are always moving, and so it's really hard to say, what the real numbers are like, especially since the financial crisis in 2008 and 9. We've had really good years ever since, except for this year, and even still at this year, we're still up from where we were when coronavirus hit. So, yeah, man, it's just a lot of moving parts right now in the market.
What do you guys expect will happen after with the markets? Like I know everyone always say after the election, after the election. I mean, I hear it all the time. I hear it in real estate. And I tell people like we talked about last week, like, hey, no, everyone can forecast whatever the hell they want. Half will be right, half will be wrong. From your perspective, with in regards to the markets, though, because I think for me that's a little bit of an unfamiliar territory.
Mm-hmm.
What is being said amongst your peers on what's going to happen after the election, or do you guys know?
It's so hard to tell, man. Like it's kind of one of those things where you can't plan for what is going to happen. You can only kind of take what you have as far as information is right now and then make decisions
Right.
off of what the data says and like what you actually have in front of you.
Right.
There's so many different components to what would happen if one side is, or let's just call Democrats ended up sweeping the House and the Senate, but then President Trump is still in the presidency. Like what if all those things kind of switch? there's so many unknowns right now, and there's so many different ideas and thoughts that are being kind of thrown around on both sides. It's there, you can't really tell until, you know, the law is actually written and something's on the president's desk and he signs it. So it's,
all right.
yeah, I mean, at the end of the day, it's just, again, planning, understand that there are going to be ups and downs. But over the long term, it actually ends up to be okay. Markets are efficient. So what about you? How was, I know that you said your week was super busy. Have people been talking about the election on your side as far as like what real estate's going to do? And I mean, there's
people have been talking about it. Yeah. I mean, it's definitely
there's
something that's mentioned, and that the rates are going to go back up after the election, and that, and I have no idea what the Fed's planning on doing with the rates. I had someone locked in today at 2.785, which is insanity. And back in March, it was actually Mark who locked a different client of mine. Back in March, he locked someone at 3.675, and we thought this was the greatest week in history. Like, wow, 3.675. You know, and there were people closer to 3 at the time and stuff like that. But now people are routinely getting locked. 3 clients this week below 2.9.
Yeah.
3 different people. People are doing refis in that range, and so the money is like free. The motivation for buyers is at an all-time high, and the inventory is still ridiculously low. So nothing's really changed besides, I think most people I talk to that are in this business are super busy, myself included, because, you know, there are a lot of buyers out there with cheap money trying to get into, you know, real estate investments or get into a home or whatever it may be. So the motivation level is high, and the sellers are raking in the dough. You know, multiple offers on everything. Everything's going for above list price. People are having to waive appraisal contingencies. One of my current escrows included to get the deal. We had to waive the appraisal contingency. So there is some more risk involved on the real estate transaction side to get, you know, if you're competing against 6 or 7 offers and you really want the home, you have to do what you need to do.
Yeah.
So it's just a busy time. Obviously in real estate, we love that. And it's a good problem to have, because who knows how long it'll last, you know?
Yeah.
Maybe after the election, everything dies out and nobody has, you know, much going. But I think, you know, as long as I've been doing this since 2012, it's been more or less pretty steady. I was fortunate to not be involved in 2008. I didn't have to do a lot of short sales. In fact, I've only done 1 short sale in my career. So it's a good time to be buying. It's a good time to be selling. I still think the market will continue to trend upwards. The money is still cheap. And again, it's not a 2-year hold. It's a 6 to 10 year hold minimum, in my opinion, with, you know, this sort of stuff. So, you know, it's good. All's good for everybody.
Yeah. It will be really fascinating to see what happens from the propositions standpoint, because there's a lot of kind of property taxes and new sorts of things that have been introduced. So we'll see how that whole thing shakes out. But yeah, man, it's a busy day. Let's get back to it. And
yeah, let's get back to it. Well, good seeing you this weekend. Practice Aloha this weekend, everybody.
Compassion, you know, and
I've
peace.
been stressed this week, so.
And just be in total Zen mode, everybody.
Yeah. Thanks, guys. And
right.
we'll see you next week.
All right. Cheers.